Treasury yields inched higher on Tuesday, a day before Mr. Powell will speak to the House Banking Committee. And it seems to me at this point that momentum that we got on Friday on that real strong jobs number, on the potential for less aggressive rate cuts from the Fed, or maybe policy shifts that are different or haven't been priced into the market, everything sort of changed on Friday after that jobs number came out, with the idea that the Fed may not have all the ammo they need to persuade those around that they need to cut rates, is that more that they want to cut rates. Remember the old saying, you cut rates when you raise rates when you want to, you cut rates when you have to. And this might not be one of those times where they have to cut rates, although the market is telling them something different. It's now coming into, you've got a stable economy with strong jobs. You've got an inflation that's running a little bit low, but certainly cutting rates after what we've seen over the last several years of rate hikes may make you double think what the Fed's doing here, especially when you throw in the political rhetoric that has been hampering the Fed. It kind of makes you scratch your head and say, what are we dealing with here? Are we looking at it politically or economically? And right now it looks like they're looking at it both ways. And I think at this point, the 10-year note yield, when we say it's rallying, the yields are going up strong, it seems to me that 205 is not a level that we would say is a high level. Certainly remains stubbornly low, certainly has more upside than downside. And downside is driven by fear, upside is driven by greed. And I think at this point, right now, you're seeing some exiting those longs in the Treasury market that have held on. The idea that even if they're wrong and yields continue to go lower and prices go higher, they can get back in and still be able to capture some profit. So at this point, that 2% level seems to be getting a little bit further away. It's going to take a catalyst event to get there. Boy, isn't it good we have one coming up later this week. And market volatility, surprisingly, ahead of the Fed's testimony, in the wake of what we saw last week with the jobs number, is hovering on its recent lows. And recall we saw 10-year note implied volatility get upwards north of 5%, a level we haven't seen it in a long time. And as quickly as it went up, it came right back down. And right now, the market seems very comfortable with this hanging around 2%, maybe somewhere between 2 and 215. And it's going to take a breakout move, not just through 2% or maybe above 215. It's going to take a big move to get volatility bidding again. I'm talking about getting down to that 185 level from the November 2016 launch, maybe getting back up to 2.25, so a level that seemed low at one point, but now seems very high. And ultimately, you got to break out of this range in order to see volatility show any kind of pulse or any kind of concern, because that's something that we haven't seen since those highs were put in about 6 weeks ago. And lastly, let's talk about what's going to happen. Mr. Powell is going to say tomorrow, boy, is he between a rock and a hard place, because the Fed, while they want to be patient and they want to wait and see what the data tells them, the markets have been very quickly to price in rate cuts very aggressively. And while the market's still seeing a rate cut at the end of this month, whether that second rate cut comes in September or December is now a bit of a question. There's a bit of blurriness there, which I think helps the Fed, because right now, if they don't go in July, the short end has to reprice very quickly. It may not affect the long end initially, but the short end definitely will have to be repriced, and any expectations that are priced into July will move right out to Sep. So I think at this point, if the Fed does cut in July at the end of this month, it leaves the Fed open for that next cut to possibly happen in September, December, or not at all, depending on what the data tells them, depending on where the global economy is, and yes, depending on where this whole trade deal comes through. So at this point, Powell has to be very careful with his words, and I think he will be. Likewise, I think that he'll leave the door open for either, because he doesn't want to make the Fed's policy decisions while sitting in front of Congress. He wants to do that in front of his cohorts at the Fed. So at this point, he may lean one way or the other, but right now the market's telling him they're expecting a rate cut. Will he give it to him? We'll find out tomorrow morning, shortly after he begins speaking.